Hi guys, welcome to the part 3 of 5G stock analysis. In this video, I'll be sharing the stock analysis for Qorvo and answer these 3 questions. Is Qorvo worth investing in? Is it a buy or sell at the current price? And finally, is Qorvo trending up or down from the technical charts? Now, Qorvo is in the hot 5G market space and my expectations are quite high for this sector. Their main products are chipsets and processors in the Wi-Fi and RF domain, catering to a wide array of applications such as laptops, mobile phones, and the auto industry, to name a few. Since they are also in the defense and aerospace industry, I'm curious to find out if they enjoy a premium and does that reflect in higher profit margins. So let's dive right into the financials and see whether Qorvo is a buy or a sell. I'll be using the quarterly reports in this stock analysis video. The revenue has been largely flat for the past few quarters and stands at around $800 million per quarter. The gross profit rose sharply in 2019 to $483 million, but has started to slowly trend downwards to about $325 million per quarter. The gross margin has been hovering around 41%. That is quite a decent margin and is a good sign for Qorvo's top line. Now we can see the same rise in operating income in 2019, followed by a downtrend in 2020. Qorvo is a profitable company and has been producing a consistent operating income. It currently sits at around $93 million per quarter. The net income is looking good too. Qorvo reported a net income of $97 million in the most recent quarter. Net margin is at 12% for the most recent quarter, with 6% in the previous quarter. Qorvo too has been investing heavily in research and development, similar to other 5G players. R&D investment has been increasing quarter on quarter. It currently sits at around $130 million per quarter. While the R&D is rising, sales and marketing investment is flat. I am quite disappointed with the flat revenue and declining profit. I was hoping to see a rising trend. This was the same pattern that I saw with Qualcomm, and all that investment in R&D is not resulting in increased revenue. I am also a bit concerned with such low levels of margins. Qorvo could easily go into the red if revenue starts to drop. On a per share basis, the earnings per share is at 83 cents for this quarter. The earnings per share have been in the low ranges between 0.43 and 0.83 for the past few quarters. That gives an annual earnings per share of $3.32. Qorvo has good positive cash flow from operations, but the year-on-year comparison shows a decline of 16% from the same quarter in 2019. Besides investing in R&D, Qorvo has invested the additional cash into marketable securities as well. This is a common practice across the profitable tech companies. They have to park that extra cash somewhere, and usually it finds its way to such investments. Qorvo invested $1.3 billion in marketable securities in 2019. There is a constant net cash outflow from financing activities, mainly due to stock repurchase. Qorvo has been purchasing its shares consistently, and I like companies that buy back their shares. The share repurchase for the financial year 2019 amounted to $1.2 billion. Qorvo does not have a dividend policy and does not give out dividends consistently. Qorvo has been sitting on cash of $1.6 billion for the past few quarters, but the cash flow has since turned negative for the last quarter and the cash pile has declined to $1.1 billion. This is quite worrying. The revenue is flat, profits are dwindling, and the cash position is worsening. Now the quick ratio is still good at 2.23. Minimally a quick ratio of 1 is preferred. The quick ratio measures the ability of the company to service its short-term obligations that need to be serviced within the next 12 months. Qorvo has a very strong balance sheet with low debt and low liabilities. The assets are rising and the liabilities are also rising in tandem, albeit at a smaller pace. The long-term debt has grown from $7 million in 2018 to $1.9 billion in the most recent quarter. The increase in the long-term debt has resulted in the rise of the long-term debt over assets ratio from almost 0 in 2018 to 0.27 currently. Now here's the interesting bit. The book value per share is very high at $38 per share. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $131, Qorvo is trading at a multiple of 3.5 price to book. That is an exceptionally low value for a profitable tech company. It is very rare to find tech stocks trading below 5. Even those that are losing money are trading at higher multiples. Let's take a look at the technical analysis. Qorvo has been trending upwards since 2016, but the price has since spiked up recently with a big move breaking above the resistance at $120 mark. This move up is more evident in this daily chart. Usually, such a strong breakout will hold and the resistance zone will turn from resistance to support. I am expecting further upside for Qorvo. If we were to take the depth of the valley from the previous correction and extrapolate that distance to the breakout point, we get a target of 170. This is certainly achievable for Qorvo. So is Qorvo worth investing? It is certainly profitable and has a strong balance sheet, but the profits are on a decline. Is it worth it at current prices? I would say the low price to book value is enticing, but the PE ratio is quite high at around 40. Technically, the trend is up and looks strong. Do subscribe to my channel if you have found this sharing useful and hit that notification bell so that you don't miss out on any of my future videos. Speaking of which, I'll be doing a video on Nvidia and AMD next, and I'll see you soon in that video.